The stock market just witnessed another drop. It seems like since April of this year, we're witnessing a stock market crash every single month. Something is happening out there and it leads to a stock market crash, but then a few days later, the entire market recovers. And we're going in this cycle after a cycle. Look at the S&P 500. On 10th of October, it dropped by 3%. 3% is a lot of money when the total valuation of the market is $57 trillion, just the S&P 500. So 3% is trillions of dollars. Even Bitcoin reacted and it has fallen by about 10%. When Bitcoin falls, every other crypto falls. The entire crypto market depends on Bitcoin. It is the largest cryptocurrency in the world. So what exactly is happening? Well, Donald Trump has announced that he's imposing a 100% tariff on China. I thought we are over with tariffs and the two countries have actually came to an agreement. But no, that's not what's happening. We are going to have another trade war with China, after China imposed restrictions on rare earth exports. United States heavily depends on these rare earth minerals, and now China is creating more export restrictions because that will directly impact US companies. Most of the US companies that build hardware, from Nvidia to Apple to even military technology by companies such as Boeing and Lockheed Martin, will directly be affected by these restrictions, which is why Donald Trump has announced that another 100% tariff and another trade war with China is not going to hurt. You see, when two countries, China and the United States, who represent 40% of the global GDP, are in a direct trade war, it impacts everybody. They no longer represent over half of the global economy. But when 40% of the global economy is in a direct war with one another, and I mean economic war, everyone else is going to suffer because the rest of the world, one way or another, are connected to these countries. And the fact that so many US companies are directly related to China and have most of their production in China, you can see how it impacts the US stock market. That leads investors to panic, which pushes them to sell their stocks, which is leading to a market crash. In April of this year, when everything started, on the 2nd of April, when Donald Trump announced a trade war against the rest of the world, China was the biggest loser because the highest tariffs went on China. In fact, China is the only country that responded to Donald Trump with strength. And escalation went higher and higher to the point that by the end of April itself, Donald Trump has announced a 145% tariff on China, and China responded with 125% on the United States. China is the only country that aggressively responded to Donald Trump and told him, "This is China. You can't be talking to us like that. If you want to talk, let's talk calmly. But if you threaten us with tariffs of 145%, you are going to get the exact same thing in response." But then the two countries met and they started talking, and they took a pause in their trade war. Both of them have reduced the tariffs. United States has reduced the tariffs to 30% and China to 10%. And it looked like a big win for the United States, as if Donald Trump has secured a really great deal for the United States. Look at these Chinese companies. They will pay a 30%, while the US companies selling their goods in China will just pay a 10%. And that pause was extended every single time just until a few days ago, when China has decided that they will impose more restrictions on rare earth minerals, which is why Donald Trump has announced a 100% tariff. So if you look at this timeline, suddenly you realize that everything that both nations have done since April of this year was absolutely useless, because we are back to where we started. We are back to that trade war that started on April the 2nd. Both countries have leverages against one another, and both countries are not shy to use that leverage leverage against each other. First of all, China's biggest leverage against the United States is the control of rare earth minerals. Because without these rare earths, you can't build cars, you can't build technologies, you can't build computer chips, you can't build F-35s, you can't build tanks. Pretty much nothing can be built without these rare earth minerals. But what if I told you that these rare earth minerals are not even rare? They exist pretty much everywhere. In the United States, in South America, in Europe, in Africa, and the rest of the world. The problem with these rare earths is that it is very difficult to extract them, and that business is extremely unprofitable and inefficient. And nobody wants to spend billions of dollars just to extract these rare earths and not make a profit at the end of the day. The only reason that it makes sense for China to do that is because the Chinese companies who are extracting the rare earth minerals are state-backed corporations. Because when you invest in such a business, it takes about 10 to 15 years to break even. Do you see a single company in the US that wants to extract rare earth minerals when they can go and do technology companies and they can make hundreds of billions of dollars? Why go into unprofitable businesses? And because the US economy is not a state-driven economy, at least for now. I mean, it might be slightly to a certain extent state-driven economy, but mostly it's a free market economy if you compare it to China. And that's why not a single US company is ready to take that risk and invest so much money there in extracting rare earth minerals. And that's why over the last 10 to 15 years, or I would say even 25 years, China has controlled 80 to 90% of the entire market. Because they control 90% of the market, that allows them to turn that unprofitable industry into a profitable industry, even if their margins are extremely small. And that's the leverage China has against the United States. The United States can again invest in the exact same technology, start extracting, build the longest supply chain across the globe, and start making the rare earth minerals and extracting them from the ground. But that's gonna take years for the US to do that. And the United States will have to spend unbelievable amounts of money. But it's not China that is using their leverage against the United States, but it's also the other way around. In fact, United States had restrictions on China, on exporting technology to China for years. You can't be exporting high technology into China. Nvidia, even though that it's a privately owned company, has no right to export their advanced chips to China. There's so many restrictions on them. There are military technology restrictions. Such companies such as Boeing and Lockheed Martin cannot export their technologies to China. So China looks at this deal in such a way that if the United States has the right to restrict a certain exports to China, then we as China have the exact same right to limit exports to the United States. Yes, it might be vital to you, you might need these rare earth minerals, but we also look at these advanced computer chips. But we also look at these advanced military technologies as vital input for us. So if you put restrictions, we're also going to put restrictions on you. Now, the entire point of this trade war was to fix the trade imbalance between the two countries. United States buys far more from China than China buys from the United States. But if you dig into the numbers, suddenly you realize that fixing the trade imbalance between the two countries is nearly impossible. No matter how much Donald Trump is going to try, he is not going to fix it, because the fundamental principles upon which these two economies are based are so different that fixing it makes no sense. You see, the United States mostly exports energy, agricultural products, and high tech. What do you think China should buy from the United States? Energy? Why buy US energy when you can get the exact same energy at half the price from Russia? Agricultural products? Yes, China buys a lot of agricultural products from the United States, but it's not at that scale. You simply cannot buy more than you need. And finally, high technology. The United States has imposed restrictions on exporting these technologies to China. So you can't be saying to China, why aren't you buying these technologies? Because you do not want to sell them to to China. So what do you want China to buy from the United States? Everything else is manufactured in China because China is a manufacturing country. They produce their cars, they produce their smartphones. There are literally every company in China that produces the exact same thing that the United States does. And even they produce far more things that even the United States cannot possibly produce them. So what do you want China to buy from the United States? China is an export-driven economy, while the United States is an import-driven economy. What is boosting the GDP of China is to keep manufacturing, exporting, manufacturing, exporting. And that's one of the reasons that led them to become the world's second largest economy. While the United States has a completely different approach. What makes the US economy so resilient is because it has such a strong domestic market. It's not so much focused on exporting, but rather it's a consumer-driven economy. And that's why, unlike China, the United States imports far more than it exports. It's actually one of the biggest strengths of the US economy, and it's one of the reasons that allows the US economy to have the global reserve currency. Because if your nation just saves money and it's not spending, then it limits the GDP growth. But because the United States has been a capitalistic country far more than China, United States has built far stronger foundations. And that's why at this point it seems impossible to fix the trade balance that Donald Trump wanted to solve to begin with. This is the only reason that we have the trade war to begin with. And because we can't solve this problem, most likely until the end of Trump's presidency, there won't be any kind of a deal between these two countries, and we might see a few more major crashes in the stock market, but every single crash is an opportunity to get in and buy those stocks at a discount. This is probably one of the best times to start investing because we know how the market is reacting every time it crashes and then it rebounces. Imagine how much money you could have made in the last 6 months, at least since April of this year. So if you want to know what are the top 5 stocks that you should be buying right now, then check out the first link in the description of this video. That's it for today, guys. Thanks for watching, and I will see you in the next one.